Many homeowners insurance policies include loss of use coverage. But what is it? Why do you need it? Keep watching to learn more about loss of use and how it can protect your family if something happens to your home when disaster strikes. I know this sounds boring, but I promise it'll be worth it. Hey everybody, my name's Patrick McBride with the McBride Agency, and today we're going to be talking about loss of use coverage and whether or not you need it. You might already have it and just not know it. If your home is ever uninhabitable due to a covered loss or event, your homeowner's insurance should pay for the additional cost of reasonable housing and living expenses with loss of use coverage. This is also known as additional living expenses, or ALE, or coverage D. This protection can reimburse you for hotel stays, meals, storage units, and more while your home is being repaired or rebuilt, now up to your policy limits. So how does loss of use coverage work? Most homeowners insurance companies include loss of use coverage in their policies. The limit is typically a percentage of your dwelling coverage. That's the amount it would cost to repair or rebuild your home. For example, if you have a $250,000 dwelling coverage, your loss of use limit is 20%. If your home becomes uninhabitable after a covered loss, you would have up to $50,000 in loss of use coverage to help pay for those reasonable housing and living expenses. However, I want you to be aware that every policy is different. So check with your agent, make sure that they review your policy to see how much protection you have. Now, what does loss of use coverage not cover? It's important to know that loss of use protection does not cover expenses that you were already responsible for before the loss occurred. This includes your mortgage payments, rent, utility bills, etc. Also, if you have another place to stay, like a vacation home, you will most likely not be reimbursed for any expenses related to that property. And just a note, you may be responsible for a deductible for other parts of the claim. In a quick example, if you have water damage from a broken pipe and the pipe makes your home uninhabitable and you have a $1,000 deductible on your policy, you would first need to pay that $1,000 for the repair cost before the insurance company starts paying out on the property part of your claim. Every insurance company handles deductibles a little bit differently, so absolutely make sure you know what yours is and how it applies before filing the claim. Everyone's insurance needs are different. Loss of use coverage is typically based on your dwelling coverage, and it's calculated most times between 20 and 30% of your home's total value. Whether or not you need this protection really depends on several factors, such as your assets, location, and personal preferences. With all of that said, speaking with your insurance agent is the best way to determine what coverages are right for you and how much they should cost. If you still have any questions about your coverage, our team is always here to help, even if you're not already a client of the McBride Agency. Go ahead and schedule a call with our team using the link below to see why we're your modern insurance experience.